Sure. We were pretty excited. 2019 was, we were the top performer of TSX listed mining companies.
Wow. And so in terms of being able to discover that, where is that measured?
That's measured off of all the share performances of all the TSX companies, mining companies like Agnico, Kirkland, Barrick, Juniors. We had a 463% share price improvement in 2019.
Why is that?
Okay, it's because of our Fenelon project. So Fenelon, we purchased that in late 2016 from Balmoral. At the time, it wasn't the core asset for Balmoral. It was a very small property that we had eyed as part of our acquisition strategy. So let me just, maybe I'll start from the beginning. Our company has been in, probably this is our 20th year as being listed on the TSX, and I've always been looking for copper nickel PGM properties in Sudbury, looking for the Victoria type of FNX or Vale's big deposits. So I think it was around after the financial crash, but sometimes around 2011, the company was looking to transition itself from being just a pure exploration company and becoming a cash flow generator with growth through exploration and acquisition. And that's when they were looking for somebody with that kind of experience, and they asked me to join them. My experience obviously started as a mining engineer with Wallbridge for about 13 years. After that, joined a small consulting company, made it to be one of the largest in Northern Ontario, sold it to a company called Genivar, became their EVP, and used that as a platform to grow their mining business. And we grew that to about 650 people before I joined the company. So my experience of operations, engineering, and M&A basically was what they were looking for. So when I came into the company, we looked at trying to talk to others about their non-core assets. A lot of the major companies, even though their properties are non-core, they don't necessarily trust the juniors to take their baby or to one of their properties without, being hesitant about it. So we said, in order for us to be able to even talk to them, to the majors or others about their non-core, we have to prove it to ourselves and to the market that we can do it. So we actually put our first of our own project. It was a copper nickel PGM that we called Broken Hammer, that we in fact mined it in Sudbury, brought it to Timmins at the Northern Sun Mill, transported our ore. During 2014 and 2015, where the junior mining companies had a hell of a time raising money, we actually managed to generate about $4 or $5 million free cash flow. But more importantly, got that experience under our belt to be able to talk to others about their non-core assets. So late 2015, I assembled an M&A team together. Myself as a mining guy, another mining engineer. We got hired a couple of geologists, added a team to look at other people's assets to see if it fits our criteria for acquisition. Our acquisition criteria was it has to be less than 5 years to production. It had to be in Canada, outside of British Columbia and the territories, partly because we wanted to meet the first category. And more importantly, it had to be scalable. When we started looking at this, we were a $5 million company, and we couldn't find something that already had 1 million ounce or more. We certainly knew that the scalability was what we had to look for. So when we did the due diligence, the guys, we were telling the guys, make sure that even if it's small, as long as it has the potential for growth. So when we looked at Fenelon as one of the projects, it was non-core to Balmoral. It had 40,000 ounces at surface. But wherever they had drilled outside of that little box that they had Swiss cheese, there was a lot of good structures and some gold mineralization that nobody had ever followed over 20 years of ownership. So we basically went and paid $3.5 million cash for this property in late 2016 for what it had, which had 40,000 ounces. In terms of dollars per ounce, it was pretty reasonable, maybe even on the high side, but we certainly saw that as an opportunity to be able to grow this. So the entire 2017, we had some fantastic exploration results. We had triple-digit grades over several meters, pretty well with every hole that we drilled in there. So at the time when we bought it, we had thought that it had 300 ounces per vertical meter. By the end of 2017, we'd grown that to over 1,000 ounces a vertical meter. But it was really, at the end of the day, we were telling the market we have 600,000 to 800,000 ounce target on this property by us drilling. It was sexy for a junior company that paid $3.5 million, and we were telling 600,000 to 800,000 ounces is pretty good. But from a Bay Street, they didn't really care because people are looking for millions of ounces.
Right.
It wasn't really till 2018, while we were doing the bulk sample, that it was one of those typical find story. It was December 22nd. We had a hole number 51. And then coincidentally, the hole was called number 51.
Right.
And one of our geologists from the site called our VP Exploration. He says, we have that south target. It's December 22nd. We got 30 meters to finish this hole. Can we extend that hole rather than setting up on another during the holidays? Just test that target. Sure enough, why not? Do it. 2 days after, we were, I think, 30 or 40 meters past the original planned depth of the hole. We hit visible gold, and we were in mineralization for over 230 meters in this southern part. And that was our discovery, which we called it Area 51 because of the number 51 hole. Since then, we continued to follow up, and the story goes that the entire 2019, we continued to have these flashy results. I mean, some of these holes are like probably not seen in North America over the past 10 years. These are pretty high-grade, thick intersections. So the similarity could be in terms of the size of the Young Davidson of Alamos, which they're doing in near Kirkland Lake Gold, near Kirkland Lake. But the thing is, the metal endowment or gold endowment is more than twice that. And it's starting to shape up to be a pretty sizable underground, deposit of high grade. More importantly, because we started drilling to get to these lower, what we call lower Tabasco zone, which is these fantastic grades, we're going through surface, and as we go through surface, we now seeing near surface grades similar to Detour's early days. In fact, it's on the same break as Detour Gold. We're actually 70 kilometers east of Detour on the Quebec side. And so I'm seeing some of those similarities. Obviously, our open pit story or the large open pit type deposit is yet to be understood because we continue to drill this year to see if we can also add to the underground resource. These are the reasons why in 2019 our share price went from, I think we started the year at 15.5 cents, we ended it at 94 or 96 cents. So those are the reasons for it. This year, the continued exploration results that we're going to have every 3 or 4 weeks, it's going to be another catalyst for us to maintain or improve that share price even more so.
Well, certainly in preparing for this interview this morning, looking at the latest string of news releases, there's a lot of very encouraging news there.
Absolutely. I mean, and we see continuing to do that because this year's program is even larger than last year, and we're probably going to be the largest exploration program in Quebec, if not in Canada, at 120,000 meters per year.
The budget? What's the budget for exploration this year?
The budget for exploration this year is about $36. That's including the entire corporate cost as well as some of the studies that we're going to be doing. So we're going to have about 120,000 meters. Our all-in cost is roughly about $3 million a month. One of the other parts that the reason the shares got good support is the fact that we obviously have Eric Sprott as our large shareholder of about 22.5%. But about late November, Kirkland Lake Gold decided to also be one of our shareholders. So they're our second largest shareholder now at 9.9%. So we're well financed. At the end of 2019, we had $57 million in the treasury. So the $36 million budget certainly is well funded this year, but it also gives us that flexibility this year with the additional $20 million to be able to either accelerate the program or be well into 2021 as far as the extension of the exploration. We intend to cut off the drilling by the end of this year to be able to come up with a resource by the first quarter of 2021 as well on this deposit.
Okay, and then what? And then if you think beyond that, which you typically have to do, you don't think in just in quarters in these types of situations. You've got to think in terms of years looking ahead. So is there a I'll call it a business model or a PEA that you're targeting, and what happens at that point?
So our initial goal has always been that we wanted to be greater than 100,000 ounce producer in 5 years. We're in year 1 finished, year 2 now starting. So We certainly are still looking for that. When we say 100,000, plus on 100,000, it's not 100. It's just plus 100,000. It could be as much as 500,000 ounces a year. So that's the focus. So the intention is to come up with a resource, and immediately following that, go ahead through the permitting process as well as an economic study, whether it's a PEA or whether it's a feasibility study. It all depends on the level of confidence we have in the resource at that time. In addition, we're going to continue expanding the resource along the strike and down to depth. We just decided that about 4 months ago to go, test another target 800 meters away, and our very first hole hit pretty good mineralization. So this thing now 800 meters away, a wildcat hole. Of course, not quite wildcat because you follow some of the geology and some of the geophysics. But we had, I think, the grade came at half a meters of 88 grams a ton. And then we decided to do another hole, came back a couple of meters of 5 grams a ton. Now we know that this system now goes another 800 meters.
Right.
But our focus this year is certainly the 95% of our drilling budget is going to be expanding the existing known mineralization to bring a resource. But about 5 to 10% of it you always do for what we call a regional exploration, try to see if we can find other Fenelons on our property, or even extending the existing mineralization that, another kilometer or so.
Is there any risk in being, too excited or, overly enthusiastic about some of these results in terms of the expectations going forward from the market and some of the investors, in terms of the pressures that would be put on yourself and your team to be able to follow up on these kinds of results and deliver the kind of the kind of outcome that they might be looking for?
Oh, this is exploration. Risk is always in exploration. We all know that. But at the end of the day, when we really look at this shear zone that we call the Tabasco zone, we've demonstrated that we've drilled 75 meter step outs. These are 75 meter spaced holes, and we continue to intersect the gold pretty well where we expected it to be. But more importantly, we drill a 250 meter step out to it, and we still hit it. So from a confidence point of view, it's starting to shape up to be a pretty consistently, getting this zone to be expanded laterally and to depth. Obviously, the infill drilling has to answer for that resource that we were talking about. So the risk is, if you had a hole that hit 30 meters of good grade, and then you went 200 meters, also hit 20 meters of good grade, is in between zero, or is it the same? That answer will only be given when you finish drilling the infill holes. But the confidence is a little better than just going to an area and drill one hole here and then one hole a kilometer away, because we're now drilling this systematically. So the chance or the risk is always there for exploration companies. But in this property in particular, when it comes to the underground Tabasco zone, which is probably the most metal endowed, we're quite confident that we're going to come up with a meaningful resource. And for us, a meaningful resource is greater than 1 million ounce, mostly in indicated category.
And I'm going to assume that one of the things that is part of the bigger picture here is that as you need additional cash flow or you need additional cash, that you've actually got a resource that you could bulk sample that would deliver some cash flow as well. Is that a fair?
Absolutely. Yeah. So we also had applied for, when we did the bulk sample and everybody else thought about this main Gabbro zone, the one that I was telling you, we think that it has 600,000 to 800,000 ounces in the beginning. So what we did is we decided to go ahead and apply for a production permit for a 500 ton a day, around 500 ton a day, to mine this high-grade deposit and generate some free cash flow, and then be able to put that towards the development of this larger discovery that we've had. So that's still in process. We expect those permits to be received sometime in the second half of this year. Okay. We're not exactly sure because obviously it's in the, it was contingent on completing some of the studies which we have done now, and then it's basically in the hands of the regulators to review, and if they come back with any kind of questions or mitigation measures that we've got to do. We also have a pretty good relationship with the First Nation group in Quebec. The First Nation groups are very well organized. It's unlike Ontario, and they're more business oriented. They understand economic development. They understand that for them to be benefiting from it is for the projects to proceed and to be developed, rather than trying to see if there is a short-term benefit for them and not them. So they're looking at it from a long-term benefit point of view, and we're very pleased with the way in the Quebec region, especially in the northern region, how they've developed this. And so we're discussing things with them. We actually are in the process of completing an IBA with them, and they're part of the Cree government. And the Cree government in Quebec designates the groups that are responsible in that area, so you don't have to negotiate with many groups. Yeah. It's essentially one, although you still consult with most of or all of the groups, but in particular you decide to focus on the areas that they're most affected. And that's been going very well, and we think that before the end of the year we should have the IBA as well. So things are moving along on that front as well.
So I guess I was going to say the elevator pitch for 2020 is if you're stuck in an elevator with someone and say, hey, listen, 2020 is going to be a terrific year for us, and in terms of advancing the bigger picture of the long-term plan. Yeah,
we're well funded. We have cash in the treasury. We'd be able to have about 100 to 120,000 meters of drilling this year. We're expecting that at the end of the year, we'll be delivering a meaningful underground high-grade resource. Along the way, at a periodic, anywhere between 3 to 4 weeks, we'll be coming up with results of our drilling throughout the year. So those are the catalysts, and we believe that this share price is still undervalued as opposed to what we could deliver from this property.
Perfect. So is there anything else you wanted to add before I sort of close it off?
I think the only other thing that I wanted to add is, as I mentioned, we were a copper nickel PGM explorer in Sudbury. We still have a very valuable set of properties in Sudbury that we need to unlock its value this year. And I'm a believer that we wanted to spin it out because we understand that the gold and the copper nickel PGM sort of different investors group. But I'm a believer if I'm gonna spin out something, it's like sending your kids away. You don't want them to come back for rent money. So we needed to have an additional near-term to production asset to it, and that's one of the reasons we actually made a deal with Sibanye-Stillwater to operate their Long in Canada operations. But with that, we received 20% of their asset, and we intend to develop that asset and be able to, at the end of the year or sometime thereabouts, spin out all of our copper nickel PGM assets into a different vehicle, and our shareholders will enjoy owning both. So there's the added benefit that we're hoping that we can deliver to the shareholders.
Okay, terrific. Well, Maz, thank you for joining me on MiningLifeOnline.net, and hopefully we'll be having additional exciting discussions down the line.
Hopefully. Thanks.